What is up, everybody? Welcome back to the official Joshua Earp YouTube channel, where we talk about technical analysis and we talk about the big moves before they happen. That's why it's so important to tune into this channel and also to my brother Naeem's channel, which link is in the description below, so that you can see these moves that we've called well in advance. All you guys have to do is go back, a day, 2 days ago, and look at what we were saying. We were talking about this spider line right here. We're looking at Bitcoin, by the way, on the 4-hour. So we were talking about this spider line up here, and for those of you that were watching the channel, and if not, you can go back. We had a short here at 24,000, and Bitcoin broke out of this channel. So we had sold our position down here, and then we had re-entered on this next pump, and so far we've just kind of been holding our position, and everything is working out as planned. So once again, if you go back to those videos, you'll see these white lines here. They were already here on the chart before this price action was even here. That's how early we called this, before anybody else. Naeem and I are always the guys that we always call this stuff, right? So the thing is we're looking at the 4-hourly here. First of all, let's do first things first. Let's take a look at the monthly and just kind of see where we're at here as far as the monthly goes. Now, we do have a monthly candle that is green, but boy oh boy do I not like the way this wick is looking on the monthly. Now you kind of can't see it because of this white line, but basically just realize this whole entire white line, that's a wick. So we do have a green monthly candle, but we have to be careful because a relief rally, or you could call it a suckers rally, it does not mean that we're in a bull market quite yet. And I'm going to be talking about that. We did pass, we broke this resistance line of this Gann fan right here, but we do have another one right around this level. And we have to pass and break through this second Gann fan right here in order for me to be 100% bullish, right? Because that is a very long-term, ever since we hit the top, that is a long-term resistance line. And until we break out to the upside, it's going to be very hard for me to be bullish. Now, let's go ahead and take a look right here at the weekly. Okay, so like I said, on the weekly, we did pass the this Gann line of resistance, which is very important. But however, what you'll see is that the wick on this weekly candle is ridiculous. It comes straight up to the spider line, and now it's actually below the other spider line. And so if we end up having a cup of coffee, which, to be honest with you, it kind of looks like we are below the spider line, then we can see further down movement. Let's go take a look at the daily now. Look at this, 3 red dead soldiers. In fact, actually 4 now at this point. 1, 2, 3, 4 on the daily. I mean, this price action is playing out perfectly. You couldn't ask for this to play out even more perfectly. I mean, we saw this coming. We tried to warn you guys. If you didn't listen, then it's your own fault, right? But at the same time, the least we can do is just tell you what's coming before it comes. Let's go take a look here at the 6-hour as well, which is the institutional time frame. And I'm also going to pull up YouTube, and we're going to see, kind of judge the response here in the comments section. So let me pull that up really quickly. I don't want you guys to be left out. And let's see really quickly. All right. So with all that being said, feel free to drop whatever you'd like as well in the comments. Now, this is the 6-hour. This is the institutional time frame, and something to understand here is that we are below the volume-weighted average price on the 6-hour. So that means this 6-hour candle right here, not only are we below the spider line, but we're also below the volume-weighted average price, which is one of the most important indicators as far as moving averages go. Okay, so let's go take a look now. I really don't like going into the lower time frames unless I'm about to plan my entry or exit, so I guess let's just take a look at the 4-hour. But yeah, the 4-hour is not looking good, and the fact that we came up and tested this spider line as resistance tells us a lot. And so, as I said before, we're holding this short at around this level right here. And take profit as soon as we broke through this. This was actually the signal right here. So this white line that you can see ascending right here, as soon as we broke below that and tested it as resistance, that was your buy signal to enter a short, or in this case, sell. And we're now back in the channel. So the thing is, now the next target for taking profit, take 25% here at the spider line. Then the middle line here, would be another take 25%, and another 25% at the weekly, and then maybe hold the rest for around the monthly. And let's just hope that we don't break below this parallel channel, because if we break below it at this point around roughly 20,000 US dollars, then that would call us into question here for a massive double bottom on 17.5, which would actually put us at about let's say 17.8. So not really that much better, but that's kind of what we're seeing, guys. This is exactly what we're looking at. We called this price action before it happens. Just go back, rewatch the videos. We had this drawn out on our chart beforehand, and it's really not rocket science, guys. The reality is, even if we are bullish, it's just nothing goes up in a straight line forever. That's for damn sure. Now, let's go take a look at the DXY, and I'm going to hand it over to my brother Naeem. So the DXY, as Naeem has mentioned, is closed. We're going to look at it on the daily real quick. And, we are in price discovery, and we're on a very critical key support line right now. Now, Naeem, check this out. What do you think about this? According to this GAN technical analysis, and then we're gonna turn it over to you, and then we'll take some questions after that. So we came down and wicked on the daily. We wicked directly to this GAN fan technical analysis, almost picture perfect right here, literally right here. And what happened? We got rejected. Okay, we got rejected. That's what happened. Now, the interesting thing is the DXY is incredibly bullish. So if we're not able to break and breach these levels right here at around 106.29, then that means that we could see some more further up movement for Bitcoin. I mean, as the DXY goes down, everyone knows Bitcoin goes up, etc. So that's kind of what I'm looking at. And so that's what I wanted to cover. Let's go ahead and put it back over to Mr. Naeem al-Obaidi, and then we'll go ahead and go from there. So let's have you take it away.
Thank you so much, Josh, for talking about the rejection that we've predicted here for Bitcoin from the start. Even before we started to break out above 22,000 US dollars, we were expecting 24,295 to be that major resistance, and that was the initial candle high. And then it's not a coincidence that the lower high was the exact second major resistance at 23,795. If anyone took a short position inside of this area, then you are massively in profits on 9x. You should be at about 80% profits just with this downside we've seen so far. So we're just really looking at the tape right now, and it's clear that Bitcoin is rejecting an important resistance, and there's potential at this point that we could see further downside in the macro. Now, there's also a case to make for the bulls that potentially Bitcoin will only come back down to form a higher low before seeing continuation of the upside. And so I think that we have to take fundamentals into account here. And on July 26, we have the Feds announcing the next interest rate hike. And the DXY is having its cup of coffee here at 106.50 about 4 days before this announcement. And so I think this is the way this is going to play out. It's quite simple. If we were to just read the tape for what it is, if the Feds announce an interest rate hike that is greater than what's expected, which people are expecting a 75-point basis interest rate hike, if they announce a 100-point basis interest rate hike, then I think the DXY has a lot of room to the upside in the immediate short term. And then on the opposite end, if they start to take a more, conservative approach with interest rates, and they announce something like a 50-point rate hike, which is less than what people expect, maybe the DXY actually drops below 106.50, and then we can start to see a continuation in the equity markets and for Bitcoin to see some further upside. And that doesn't mean that we're free and clear from this bear market, because at the end of the day, the DXY, it can come down all the way to its 20-week moving average and still be in a bullish trend, because the 20-week moving average, we call this home base. This is the most short-term moving average that you want to monitor when something is in a bullish trend. We were catching the DXY as soon as it came above the 20-week, and then it started to hold the 20-week. We started to call the DXY into a bullish trend, and that was very clear. If you just watched the 20 weeks since then, you would have been able to see that the DXY has been bullish since May of 2021, when Bitcoin topped out at 69,000 US dollars, and we were able to call the top there as well because of the DXY. So the DXY can come down to the 20-week moving average, still be bullish, and it just elongates this bear market. And so I think that that's the way this is going to play out. We certainly cannot say that we've had a full-on market reversal of this bear trend when we're still below the 200-week moving average right now. As we record this video, the 200-week sitting at 22,650. We broke below that. And so if this candle, this weekly candle, closes with a wick into major resistance and a body pointing down the way it is, then that's not looking good whatsoever. And if you did take a short position here at 24,000, you're going to be a very happy camper there. If we go into Ethereum to US dollar pairing, if Bitcoin continues to see further downside, that's going to put Ethereum in a position to come back below its 2018 previous all-time high at 1440. And the problem I see with that is this isn't just one extra support level for Ethereum. This is the 2018 previous all-time high. If we break back below 1440, it's going to be a tough time to get back above that level. It's going to turn into significant resistance. And so we're really at a crossroads right now. Everything has hit major resistance. This Ethereum to Bitcoin chart forming this lower high here. This is the third lower high, 70,000 Satoshis. If we were to assume that Ethereum to Bitcoin chart was going to just continue parabolic, uptrend here, I think we'd be a little bit delusional, because Ethereum to Bitcoin chart only goes up when we're in a bull market. And so for Ethereum to form any new all-time highs, we're going to have to also consider Bitcoin forming new all-time highs. And that's just not the case right now in the immediate short term. Bitcoin dominance, as a matter of fact, is completely, I would say, oversold. It's way too low right now. It needs to come up. And so if I see anything happening over the next few weeks into the next few months, it's going to be Bitcoin dominance actually coming back up. So that's why I'm not so focused in on altcoins right now. I'm focused on Bitcoin. I'm focused on taking long-term positions in spot when we come into these extremely oversold ranges, like when we came below the 2018 previous all-time high, taking those long-term spot positions that I don't plan to sell, holding in a hard wallet, and then entertaining short positions when we hit these major resistance levels for the first test. That is the way to make money in this market right now. There's no other way to make money in this market. And so you have to also consider that if you do buy Bitcoin right now, that there still could be 50% downside left. We saw Snapchat after their earnings yesterday down 40%, and that's after an already brutal bear market. So it could happen. It could happen to any asset. I mean, Snapchat literally for the day down 39%, but it's already down over 80% from its all-time high here. I mean, we're talking now 87% correction, almost a 90% correction. And so, we just have to consider how bear markets work. Snapchat was down already 80% from its high, and then after one bad earnings, it dropped 40%. And so that was after already being down 80%. And so if Bitcoin right now, if we were to look at it from peak to trough, is down 75%, then another 40%, 50%, 60% drop is still in the immediate short term if we're not able to get above this major resistance at 24,300. We need to get above it. I don't care that there's a CME gap anymore at 28,740. We obviously did not come to fill it. We didn't even come to test the 50-day moving average on the futures chart. So futures are still trading at a discount, which is indicative of us still being in a bear market. And then there's a CME gap at 34,420. So who cares about the CME gap at 28,000? This is the real CME gap that we want to monitor. Bitcoin's sure as hell not going to move up to 34,000 in the next few days, especially with what we're seeing with equity markets. It's already struggling just to follow the NASDAQ. If Bitcoin were to follow the NASDAQ, it would already be at 30,000 US dollars, because you can see this is the consolidation that Bitcoin was in when the NASDAQ was at that exact same time frame. And the Nasdaq has already reclaimed that consolidation as of recently, but Bitcoin has failed to do so, indicating that it has been weaker than equity markets, and that has been ever since the Elon Musk news of him selling his Bitcoin. Since then, we've seen the S&P 500 close green daily candles, actually forming new highs in this consolidation, but Bitcoin has been not performing as strong. Now, the fundamentals are always going to be on the table. It is what it is. At the end of the day, this is black and white. We hit major resistance. And so far, it's acting as a major resistance. And so if it walks like a duck, if it quacks like a duck, 8 out of 10 times it's a duck. So this duck is telling me that we're going to be coming back down, potentially testing the next level of support. And that in the immediate short term right now is 20,000 US dollars. And that's what I'm seeing, Josh. I don't think there's much else. I will say there's an area of interest here at the weekly open that I'm monitoring at 21,000 and then the monthly open. But I consider this whole thing the same area. So, let's say you're looking for long positions. I would start at the weekly open and then enter at the monthly open. And even if we come down further, continue to enter into that long position, because we've seen this happen when Bitcoin has bottomed out in the past. And a lot of times it will break some of these higher lows just to fool traders, just to clear out some of those margin positions. And so I think the major stop loss is below the big yellow line that Josh has. And then for me, that's 17,204. As long as we don't go below that, I think that we could see a bounce. So I wouldn't mind entertaining a long position here if Bitcoin gets there. But the weekly open 21,000, that's significant. 20,000 still very significant. And then we could even go all the way down to that yellow line that Josh has drawn out, which is around 17.5 to 17.2, and we could still see a bounce and even just a lower low form, right? I think it's quite clear that we'll get a bounce, I think, and I say that because volume, to me, looks good here. And I say that because if we were to pull up the institutional time frame, what you'll notice is we did get a lot of buyers here at 17.6. So I think that coming back down into that area, we're going to see a continuation of that institutional bias where we'll start to see more volume get triggered down in these areas. So that's what I think, Josh. I'd love to hear your opinion, or if you want to wrap up, man.
Yeah, for sure. Yeah, thank you so much. That's great analysis. And so let's go ahead and take a few questions, and then maybe we'll also go ahead and cover maybe some other charts. Let's see. Isaac says, where is it safe to enter a short? Right now, I would not enter a short, and that's a very good question. I'm glad you asked that, because sometimes when you miss the boat, you miss the boat. You don't want to FOMO in, and then potentially get wrecked. So that's all I got to say about that. But let me just show you more distinctly what I mean. So, and by the way, Naeem, you see this? It's kind of hard to see, but see this Y, this line right here? That's the yearly open. I'm only asking for the yearly open, Naeem. I'm not asking for much. No, I'm just messing with you. But anyway, so let's answer this gentleman's question. So the only thing that I'm not liking about entering a short at this current moment is that, just because I drew these lines here doesn't mean that it's guaranteed that we're going for sure to get to the weekly or monthly open. I mean, this middle line right here has served as, support. Like, look at this. It's support here, resistance here, resistance there, support here. So this middle line is a big area of support. I would say, if we were to pass and break through to the downside of this middle line right here, then I would consider maybe opening up a short if I wasn't already in a position. The best thing to do is just watch these videos as soon as they come out so you can be the first one to be notified to enter the position or not. The other thing, too, that I'm looking at on the daily is look at this. Let me switch back over here to the cross. So the other thing to note here on the daily is look at this spider line. This spider line was always served as resistance. Always, always. It was support over here, but now look, resistance here, and now look. It's now almost acting as if it's serving as support. Because on the daily, it only wicked below this spider line, which, by the way, has been around since the beginning of 2018. So, it's always best. Usually, your longest term trend lines are going to be the most accurate. Okay, so that's why this stuff matters. These spider lines are very, very important. I know it may look like there's a lot of stuff going on my chart, but trust me, this is as bare bones as I can possibly make it, because every single line here has extreme significance. Otherwise, it wouldn't be on this chart. So I know it may be a little harder to look at before, as opposed to say what's called the naked chart. But hey, we're here to be accurate with our technical analysis, not to look pretty, right? So the whole thing that I'm looking at right here is the daily candle. I mean, look at how that just wicked below the spider line and immediately got back up, and now we're right at the spider line. It's almost, Naeem and I have this funny joke. It's like, yeah, well, where's the price at right now? And it always respects our levels. And so that's something I would be careful of, because if you were to enter a short right now and we bounce from this spider line, that's the other thing too. Let me pull up a different chart on Bitcoin that's maybe a little more clean, because I want you guys to see this. That's not the most clean chart in the world. Let's go to my Bybit chart. This should be a little bit more clean here. Okay, so the one thing that you guys want to be careful of is okay, so you guys saw the parallel channel, but here's the thing. We could also draw a line here, as part of basically you already saw the diagonal parallel channel, but let's just draw a real parallel channel. Let's take a look where we're at. Okay, so let's just say maybe like right here or so. Give or take. Nothing is ever perfect. Okay, so the thing I don't like about this right now, and if you really wanted to, nail the analysis, excluding the wick, it would really be somewhere around right here. So looking at it like this, I mean, in the most bullish scenario, this is why I would not enter a short right now, and this is also why, I took profits at these levels, even though my stop loss is to break even, and actually a little bit now in profit, just because I don't want it to rebound. But in the most bullish scenario, guys, the most bullish scenario is we're going to see something like this. Okay, so we had consolidation coming up here, down, up, down. Okay, we came all the way up here, we broke out, and we could come down and test this as support. And if we test that as support, then that would mean that the next target would be around, the $28,000 level. So this is why it's very, very important to not be in a short or FOMO into a short too early. Very, very, very important, guys, because you can get majorly wrecked. Now, the other thing too is that I want to point out too is that let's also go back here to the chart with more shit on it, we could say. Little funny joke there, but I mean, even though it's all very, very relevant, what I would say is if we were to break that horizontal line, come below this spider line, and maybe even below this middle line, since this middle line has served as a very strong support and resistance line as well, this is the area I would be thinking about taking a short, if we were to break past this area. But however, to be the most responsible and the most mature and the most disciplined, I would say, look, don't enter a short at all. It's very, very risky. The time to short was at 24,000. You should have been shorting with us when we were at that level, or whenever we came back up and had this pump at this second high around, also around 24,000, but it was a little more, 23.8. Those were the times to be shorting. You don't want to FOMO in. There's been several times where, whether I'm sleeping or I wake up and I check the chart and I want to enter a long or a short and I miss the move. Sure, you could always FOMO in and set a tight stop loss, but that's just not the most responsible thing to do. Usually if I miss the boat, I tell myself, hey, look, I missed the boat. I just have to be patient, and I have to wait for the next move, which would be a long somewhere around this area at the monthly open. That's where I would feel comfortable longing. I would not feel comfortable longing around the weekly open personally. Everyone's different. That's me personally, because of the fact that the weekly open is so close to here, and there's no guarantee that this bottom parallel line of this channel is going to hold. And if that's the case, I sure as hell don't want to be entering a long here at the weekly open. However, you can be smart about it and set up maybe a limit order for 25% of your account at the weekly open, maybe another 25% limit order to go long at the monthly open, maybe another 25% right here at the GAN fan, which ironically lines up exactly with this bottom right here at 18.6, and then maybe another one here, and then hope like hell we don't break this yellow line, right? But the thing for me, and the reason why I don't set limit orders, is because hope is not a good strategy. For those that have got wrecked this past bear market that were hoping the price would go back up, I think you would agree with me that hope is not a good strategy. So I don't try to predict the market. I simply react to the market, and it saves me a lot of money and a lot of pain in the long run. And so it looks like we are starting to get a little bit of bounce from the spider line. So that's what I wanted to say about that. Let's see who else is talking to us here. Back to 19K, JW says, well, I hope not, because I'm holding a lot of Bitcoin spot right now, so I hope not. I'm just shorting to kind of hedge my bet. 22.6 is now resistance. Let's see what he's saying. 22.6 is resistance. I'm not really seeing. I guess I can see what you're saying. Yeah, but honestly, there's a few other points. Let's see real quick. I've been trying to short Matic, and I have given up. You guys are amazing. I'm glad I'm finally catching a live stream, even if I'm late. Hope is not a good strategy. It's a little town in Arkansas. That's funny. I lived in LA the last 10 years. I'm from Southern Illinois, kind of close to Arkansas. So anyway, this individual says he's been trying to short Matic. Let's go take a look at Matic real quick. Let's see what that's doing. Okay, well, if you've been trying to short Matic, I'm not sure what your problem has been, because it perfectly hit about 98 cents right here. And once again, guys, these lines have been on this chart for a long time. I mean, for a long time. And wow, look at that. Look at this, Naeem. I haven't even seen this yet. Look at this yellow line. Look at this yellow line that we had drawn from a long time ago. And look how it perfectly, just like Bitcoin, hit the yellow line and immediately came back around. Now we've hit this blue line, and exactly, like I don't even hold any altcoins anymore. And that was a good idea during this past bear market. But talk about a sucker's rally. I mean, this could really be a sucker's rally right here. Or it could be the beginning of the bull market for Matic. You never really know. But all I do know is I don't like the way this wick is looking on the weekly candle. But if we go to the daily here, we'll be able to see that this was a pretty easy setup. As soon as we started seeing it test resistance at this very critical level at around the $1 or so level, then it was a pretty easy move. So that's Matic. Let's go take a look at Ethereum, and we'll look at a few altcoins real quick, and then we'll see if you guys have any other questions. Now, Ethereum is a little bit of a different story. I would not be shorting Ethereum right now because of this major support line at 1471. So if we go back in time, let's go to the weekly and make it a hell of a lot easier to see. So this right here is the actual previous all-time high, at 1473. And so the fact is we breached above it on the weekly. I do not like the wick. I will tell you that. I'm not a fan of the wick. But it seems when we go to the daily, it looks like we're holding that level pretty well. We've gotten 1, 2, 3, 4 bounces. Usually by the fourth bounce, the fourth knock on the door, we usually get through. So if we don't end up getting through, then that would give me some bullish sentiment for Ethereum. And that's basically that. Let's see what else we have. Yeah, you got to be careful with stop losses, guys. Sometimes, a stop loss can ensure loss. And then also sometimes it can save your ass, so you just got to be careful. So that's about it. We're going to keep this one relatively short. Naeem, is there anything else that you wanted to say about anything?
Yeah, I love that your altcoin watch list was the way it was. I mean, I think that's super interesting that not only Bitcoin, but some altcoins have hit your absolute bottom, which is that yellow line. And Bitcoin certainly has hit a major support level in itself. So it's interesting to see that. I think that based on what I saw on your chart, this is like the second relief rally so far in this bear market. So if that's the case, then this could just be a bear market relief rally that leads to continued prolonged sideways, market. So great analysis, man. Your altcoin analysis is on point.
For sure, man. Yeah, this is what I'm looking at Polkadot right now. This is what I don't want to have happen to Bitcoin. I don't want to see it break its yellow line and end up like Polkadot. That would be very, very bad. That would put Bitcoin in a very bad position. So we'll continue to monitor the DXY. We'll continue to to do all this great stuff. Thank you guys for tuning in. Highly appreciate it. Don't forget to subscribe to Naeem's channel. The link is in the description below. And don't forget to also hit the bell notifications on his and I's channel so that you never miss the big moves and the big updates. And until then, we will talk to you soon. Thank you so much. And I look forward to reconvening in the near future. Thank you again, and we will talk with you later.